Good morning. This is Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, July 18th. Agricultural markets were pretty quiet overnight, mixed and two-sided trade. Fresh news is rather scarce this morning as we await the weekly export sales report. Corn right now is down about 2 to 3 cents. Soybean prices are 4 to 6 lower. Products are mixed, steady, a little bit lower in the meal, a little bit higher in the oil. Wheat prices are mostly higher, steady right now in Chicago, up 2 to 3 in Kansas City, and about 7 to 8 higher right now in Minneapolis. Fund activity yesterday is pretty quiet. Speculative traders were mostly net buyers. They did, however, turn around and sell about 3,000 to 4,000 contracts of soybean oil. Overall, they remain at or near record short in both corn and in soybeans, short in wheat and oil, and long still roughly 50,000 contracts in the meal. For the most part, U.S. weather remains non-threatening, keeping U.S. crop prospects high. Temperatures to remain in a cooler than normal pattern for much of the nation's midsection the balance of this week. Shower activity heavy in the Delta and in the Southeast, scattered rains in the Western Corn Belt. However, very limited rain across the central Midwest and the Great Lakes region. Today's updated drought monitor will likely show some easing of drought conditions in central Illinois and Indiana, perhaps a little bit of expansion of drought ratings in Ohio and areas of the Western Corn Belt where rainfall has not been as generous. Hot, dry conditions over much of Ukraine, southern Russia, and western Kazakhstan through the end of this week. However, better prospects for rain next week, which may provide some modest relief. Japan's ag ministry has bought a combined 115,000 metric tons of U.S. and Canadian wheat. Still no final tally yet on the latest Algerian wheat purchases. However, volume is expected to range somewhere between about 700 and 750,000 metric tons. Priced in the about 241 to 244 on a CIF basis. Most of this wheat is believed to have been sourced from the Black Sea region, and this is for September shipment. Chinese customs data overnight did show their imports in June at 920,000 metric tons. This was down 50% from what they imported in June of 23 and brings year-to-date imports to just over 11 million metric tons. That's down 8% year over year. Corn prices just continue to chop around at a pretty tight range here since Friday's USDA reports. September's billing support at that 390 level. And rallies this week have so far been capped at the $4 level. D's corn has managed to hold above the $4 level. However, rallies there too are also limited due to prospects for record yields here in the U.S. We'll need to find either a more threatening weather forecast soon here in the U.S. or sharp improvement in demand to spook speculators out of their record short positions. Bean spreads remain firm with August trading 60 cents over November overnight, the first time since December of last year. However, new crop futures continue to make new lows, fueled by prospects for record yields and production. U.S. bean demand should start to show some pickup here from what has been a historically slow start. And wheat prices are trying to bounce here a little bit from lows earlier here this week. U.S. winter wheat harvest is starting to wind down as we race towards completion. Perhaps signs we're trying to carve out some sort of harvest low. Thank you for listening, everyone. I hope you have a wonderful day.